Welcome to our session. Last week I was looking into a certain messages, certain things I was going over. And one thing I think that needed to be touched upon was account management one more time. I mean, knowing numbers is one thing, but managing numbers is a whole different level, right? Learning how to manage something, it requires a lot of skill. I mean, if you go to any retail store, Walmart, Home Depot, there's only a couple of managers, but not every, there are more employees, right? Here at my stock, like we want all of you guys to be able to become managers of your own account, right? I mean, I cannot click buy and sell for you. You cannot expect me to come and click buy and sell for you or for me to grow your account, right? What I can do is, or what the admins can do, we can provide our expertise, knowledge, and what we have and be transparent with that. But clicking the numbers, clicking on your broker, buy, sell, sizing, position, that's all up to you how you do it, right? Because I don't know your risk profile, only you know your risk profile. What is risk profile? Risk profile basically means if you have $1,000 account or a $10,000 account, how low can you let it go? Are you okay with a 10K account going as low as maybe $3,000? If that's something that you're going to lose sleep over, you cannot let that happen. The stock market might not be for you, right? Because in reality, the stock market, anything can happen. 10K can turn into a million. 10K also can go to zero if you do not manage your account. If you're not consistent with it, if you're just following blindly and you're just making your own plays, or you're going in too heavy. Maybe you had 3 great winners. The 4th trade is also great, but it just doesn't go in the direction. I mean, the opposite happens. Some news come over. It could be anything. Okay. So number one thing, when talking about account management, certain things that I want to touch up on. Right. Number one, first thing that you guys need to know is your risk profile. Risk profile, I already went over. How much are you willing to lose? Or how comfortable your account are you comfortable with, right? So if you have a 10K account, so how much are you going to lose in case if you happen to catch the losing trade? Or what percentage decrease in your account are you comfortable with, right? It depends on whatever amount you put in. Maybe you have millions in the bank and you're not worried about losing 10, 20K in the markets with your own, high risk account. Or maybe you're going to manage it well and grow that 10 account in the correct way, right? Not an overnight dream that we don't do any overnight big trades. We hit a lot of big trades, but we never tell you that you're going to grow your account overnight or in a week, right? We teach you consistency here and the right way of managing a portfolio, which, as according to our expertise. Okay. So what exactly is your risk profile, right? Now, how much experience do you have in the market? Months, 2 years, right? Some people trade all their life and they still don't make profits. While some people, from their first year, then all their lifetime, they're just growing and growing and growing, right? Experience is all practical. It's not books. Books you can read, you can get the knowledge, but practical experience matters. Practical experience matters, okay? In order to, now, if you were in the market during the pandemic, looking at the charts is one thing, right? So if I was to go in this chart on the weekly, so in 2020, this is PayPal. Where are we in? There we go, the pandemic. Watching the market here through a chart is one thing, right? If you were not in the pandemic, but experiencing this is a whole different level. You're learning because all those news are being thrown at you and so much negativity is in the market, yet the market rips. That's practical experience, which you learn. So it takes many years for that to develop. It's not an overnight thing. By looking at charts, you cannot know what exactly happened. So if I was to go on the SPY chart, right, and I go on the monthly chart, now this dip, many of you guys, who were following the market in the pandemic, this is looking at the chart from, let's say you started trading 5 months ago. You look at the chart, 336, it went down to 19, came back up. That's one thing. But people that were in the market at this time, they experienced this drop and they learned many things. Okay, many people learned risk management here. People that ignored it for so long, they finally learned it here when they were in heavy, and then boom, the next day the market in the pandemic just flushed. Okay, this is in March 2020, right? And me, I've been following the markets since here. I was a very young kid back then, right? I've been following the market since this time right here. Since this time right here. I was very young in 2008 before the financial crash. This is something I was really young. I experienced. I did not understand the markets that much, but it was something that I was starting to follow at that time. So I've experienced this entire shift, right? Now, if we go back in history, right here, people that were in before me, they had to wait for 10 years before the market broke out again. So people in 2000 that experienced this bubble, I was not there, right? But it took 10 years for this to recover. Look at this. It took 10 years, okay? And once they recovered, a lot of people probably went in heavy here because they made a couple handle on a monthly. What happened? They freaking took the market down again in the financial, in the 2008 financials, right? So people probably took many years just to recover here, and then boom, losses again. People that went long here, right at this level, right? So in the market, anything can happen, okay? Anything can happen. And now what we're experiencing right now is right here. So I've been in the market ever since the 2008 financial crash, right? And then I've been experiencing it this, and I'm just getting better and better each month. And now look how extended the market is right now. I mean, you know, if we were to look at the market, look how extended this is, right? But at the same time, it broke out after like 20 years. It took a long time before it broke out. Now, how high does it go? I have no idea. But the best way to play the market is with the levels, right? So my topic is starting to shift here. So let's go back to this. So practical experience is what matters a lot, right? And then your type of trades that you take. Right now, this I'm going to break down into basically, this is what I will focus on, right? The types of trades that you do. Now, if you have a 10K account, for example, now if you have a 10K account, okay, so this is what I want to pay attention to. So guys, please pay attention here. Now, let's say, for example, you have $10,000 starting balance. So your starting balance is $10,000, okay? So $10,000 is your starting balance. Right. Okay, anyways. Oh. So $10,000 is your starting balance. Now the question here is, it all comes down to your risk profile. Now me, I'm gonna go with keeping risk management in mind. Okay, so keeping the right way of doing it. I'm not gonna show you no overnight dreams, nothing. The reality of in town, how trading should be done according to my experience. Now, if you're doing options in equity, right, with a $10,000 starting balance, the first thing that you need to understand is be very picky with your trades, okay? So the first thing in your trades, you have to be picky with your trades, right? What kind of trades do you do? Now, this is not a PowerPoint presentation I'm doing. This is completely straight out of my brain, whatever I think is a right. That I did not plan this session. I don't plan my sessions most of the times because I'm just giving us my good practical experience. People that know stuff, they don't need to plan certain things. It's just in their head all day. Okay, so whatever I'm telling you here, it is complete experience. And because I'm in the market all day, like I can just keep talking about this all day. I mean, that's how much time I've spent in the markets. Okay, now you have to be picky with your trades. What do I mean by picky? Now, let's say, for example, if I'm playing, somebody type in a ticker, any ticker that you want to play, just the first one. Anyone? Apple. So Andrew comes with Apple. Now Apple here, so first thing I want to do is I want to be very confirmed about my trade. So I want to analyze the chart. So this is the daily chart of Apple. It broke out, right? This was a bearish divergence. Somebody asked us some while back. It broke out of bearish divergence, right? It rejected. Now it made a bull flag. It's at all-time highs. Okay, so it's closed at all-time highs the last week. So the daily looks good here. Then I want to go in the weekly, right? The weekly chart looks amazing, right? Held near all-time highs, and then finally it was absorbing this move, a nice little bull flag to the upside, and boom, it breaks out, a power move. Okay, so now let's go back on the daily, right? It looks good, all-time highs. So remove my drawings. Now, personally looking at Apple, I think this is the weekly chart, by the way. So let's go on the daily. So personally looking at the chart, looking at this chart, I think Apple continues to go higher. Okay, finally broke out of this resistance right here, right? It broke out of this, and then finally it consolidated here. If the buyers held above the resistance, it's above the 8 and 21 EMAs, which I follow. MACD is about to cross here. RSI looks strong, right? And now maybe with this trade, I might even do spreads, or I can buy some naked calls alone. The question is, how much do I buy here now? So I like Apple here, right? So I like Apple as my position one. The question is, on $10,000 account, how much money do I put in Apple? Which position, which expiry do I buy? Or how much time do I buy? Now, one thing, Read this over and over again until it gets stuck in your head. Those of you guys that have a bad habit of just buying weekly calls, read this sentence over and over. The longer, the further out the expiry, more chances you are right. Okay. The further out the expiry, more chances you're right. The more time you buy yourself in the market, there are more chances that you will be right with your call. Yes, closer dated call near the money give you higher percentage returns. Further out might not give you high returns as the weekly ones, but is much safer. If you're on the wrong side, at least your further call will save some value. Okay. So let's look at the numbers here. For example, just an example. So let's say, for example, you do Apple this same trade maybe 3 times. So on a $10,000 account, maybe I'll maximum put is $250. So my budget, $250 investment, right? Or a trade. Options is never investment, it's always a trade. So $250. Maybe I buy, now Apple's trading at 154. Maybe I'll buy $2 out of the money, 156 strike, right? Which might be priced at $1. I'm just making up numbers here, which might be priced at $1. Okay. Now, so 250, 156 strike is priced at $2. So I will maybe buy 2 contracts only under 250. Okay. So I'll buy 2 contracts only. $200. Okay. So I'll buy a number of contracts. 2. Okay. So number of contracts 2 and my total cost, which is $200. Okay. Now that's my trade 1. Maybe, you know, my remaining balance now, it's 9,800. Okay. So I have $98 cash. Let's say this trade goes to 0. Let's say Apple fails here, right? Or because the chart is looking so good, let's say, I mean, the trade actually works in your favor. Okay. Let's say the trade works in your favor. Apple goes to 157 on Tuesday or Wednesday. You had some time on your calls and you end up selling these at maybe, just an example, $1.70. Okay. Let's take the first trade in your favor. You had 2 contracts, which is $340. Okay. Your balance back to, so your balance now is $10,140. Okay. So you made $140 profits on this trade. Okay. Now give me another ticker, guys. One more ticker. So let's pretend like we're trading. I'm just gonna go with some numbers. Amazon. Okay, so let's look at Amazon. Perfect ticker. Something I needed. Amazon. Now the question here is a new person. What the mistake they will make? Now the calls are very expensive on Amazon. Okay, the calls are very expensive on Amazon. Now let's say, for example, a new person. Now, let's say a new person makes a blunder mistake. Amazon's trading at 34.80 right now. And let's say I end up buying a call. Okay, so Amazon, I end up buying a single call here, just a call alone. And the call cost me maybe $9. It cost me $900. Okay, my trade here now, because my balance is 10,140, right? Recommended amount. Let me just put here recommended amount. Like what I recommend, okay? $200 for Amazon, it'll be maybe $250 max. Not Amazon, just the recommended because you're $150 in profit, right? Recommended amount is $250. But what you end up doing is you have FOMO, something happens, because you made this one trade, you think it's gonna run, you end up buying a $3,500 call, okay? You end up buying a 3,500 strike, and you pay $10 for that call. Okay, $10. Number of contracts, maybe you buy 1. The total cost is $1,000. Okay, now your balance, you know, 10,000 minus 140 minus 1,000, your balance is 99,140. Okay, that's your remaining 9,140 remaining. Okay, now what happens here? If Amazon trade goes in your favor, let's say it goes to $20, you might sell, you might make $1,000. You're happy, you feel like a big guy in the house that you just spent $1,000, you know, percentage. It may like that you get, there's something trading psychology is very important. A lot of people don't understand, but trading psychology is a very big thing. Hedge funds have special departments. They have departments in their cabins for psychology where they tell traders listen to these people so they can tell you how to trade with their psychology. Here, you made the money. Let's say this call you sell at 20, you made the money, but now this has screwed up your psychology. Like mentally now, it has given you so much positivity in your brain. You think, I mean, your account's at more than $11,000. You double this $1,000. What happens next? In the coming trade, you're going to end up going with bigger sizes, and eventually one trade is going to take it right all back and bring your balance to zero. That's exactly what's going to happen. That's how trading works. If you hit a $10 to $20 call, just remember in the coming week or in the coming month, that same market maker is going to take the money back away from you because he knows that you're the same person that made the money last time. I mean, they don't know you personally, but that's just how trading works. Okay. Now here, but let's say this $10 call, Amazon gets rejected here, right? If it completely fails, now this $10, your call goes to zero. I mean, just for example, okay. I mean, this ends up going to, you sell it at zero, it expires worthless maybe, or maybe you sell it at like $2 just to save some money. Okay. Just to save some money. You're in a negative $800 balance here. Okay. Now what's your remaining balance? Right? I mean, you sold it, you stop out at $200, you're back to 93.40. Guys, are these numbers confusing? I mean, I'm just typing them out, but are you guys following along? Yes? I mean, just tell me yes if it's making sense what I'm trying to get my point across. Okay? Like basically my main point right here, which I'm trying to get across is the right position sizing, which is very critical and the most important part. The right position sizing and the total cost of trade. That's what I'm trying to get at here. Many of you guys, after hitting a big trade or one trade, you know, mentally, you have FOMO. You think everything's just going to run. This is what's going to happen, and you guys buy in. Just like Amazon the other day, nobody, you know, many of you guys did not buy Amazon here when we were playing it and we nailed it. Most of you guys did not buy here when it was time to buy and play that run. Many of you guys bought right here from on FOMO, right? Some of the good traders bought in here in MSL when I was looking at the chat. They did not play this one here. But you guys forget, I made my profits here. LB made his profits here. And here I'm playing with the partial of my profits. So even if my trade goes to zero, my account will still be up on Amazon, my trades, like, you know, overall, while you're somebody that did not play here now out of FOMO, they're playing big here. And if it goes wrong, that's going to bring your account down. Okay. But anyways, back here, now your account's at 93.40. While you had a great trade, you managed your position here, you were in discipline, but now all of a sudden, you take that one big trade, you go into a loss, you stop while you try to, you know, save this at $2. Now your account's at 93.40. Okay. Now, what might happen after this? Another thing, this has happened with me in the past many years ago. It used to happen many times. And I will sell this on a Thursday to save this $2. On Friday, it would freaking rip past the price, and the same options will be trading at $30. And now that ruins your psychology even more for the next time. Okay. Anyways, now to build, you know, you're officially now $660 down on your account. Okay, even here, first thing, you should have not bought Amazon. First thing, so Tanuj, so who typed in Amazon? Jashan. So Jashan, after this one big trade here, when looking at Amazon, no matter how good it looks, you should not buy Amazon. Why? Because calls are not affordable for a 10K account. They're simply not affordable. If you took a 5K account to 10K and you want to play a lotto on a Friday, maybe for like $3, find reasonable or a $1 lotto in Amazon. The last 2-3 big lottos I hit on Amazon were all $1 or $1 something, and they went like, I mean, they went up 700-800%. Okay, and before that 2,000%. Okay, fine, you can play with that $120 lotto. But if you're starting with a 10K account and you only made $140 on Apple, you're still growing your account. Why are you going to play Amazon? That's out of your league. Amazon is not for you. As simple as that. What should have you played here? Maybe here's what you should have done, right? So remove drawing. What you could do here is, if you really want to play Amazon and you think it's going to go up, now let's look at the trade. What level has Amazon been holding? Amazon has been holding 34.50, a psychological level. Yeah, it ran here, consolidated, making a little flag, and tech looks great, right? And maybe it runs. So what do you want to do here? We want the house. You want to become the house in the casino. You don't want to be the guy betting the cards. How do you become the house in the casino? You start playing spreads. When you play spreads in the market, in the stock market, your chances of being right increase by a lot. If you're playing calls alone or puts alone, chances of you being right are 33% and lower. Is less than 33% because time decay also kicks in here. Okay, it's less than 33%. But when you're playing spreads, your chances of being right are roughly 66%. Okay, more than half the times you will win playing spreads. Why? If the stock goes in your, if you're doing a vertical call spread, if the stock goes up, you make money. If the stock does not go up and the stock goes sideways here, right, and you're playing in the money spreads, you still make money. And if the stock goes down, that's the 1/3 where you lose money. So for 2/3, winning chances are on your side. Okay. Now the question here is, which strikes do you choose? So let's look at Amazon here. If you really want to play Amazon, Amazon has been holding 34.50 level here. You want to play spreads? Fine. We buy the 34.75 call. Maybe we sell the 34 something. So I'll just write it here. So Amazon closed here on 34.78. Let's say we buy the 34.75 call, and maybe we sell the 35.80 call. We stay in our budget. Let's say this call for this week is going for, I'm just making numbers, $20, and this call is going for $17.50. Okay, this spread will cost you $2.50. The max profits here. The max profits here, it's $5. Okay, the max profit is $5. All right, which gives you 100% potential. Anytime you guys buy spreads, this is just something you guys need to understand. When you guys buy spreads, if the stock is the strike price stock is trading at, if Amazon is trading at 34.75 and you buy a 34.75 call and you sell the 34.80 near the money, you will always have 100% move. Okay, always, always, always. That call will be going for 1:2 ratio. Okay, if you watch spreads, if you do them, it will make more sense. Now, max profits here is 5. Now let's say because 66% chances you win, Amazon goes up maybe $30 or $40, whatever, and you want to sell this before expiry. You can probably sell this for $354 and still lock in those profits. And if it holds above 34.80 for the entire week, you can lock in max profits. Okay, or if Amazon goes up like 60-70 points, you can lock in near max profits way before expiry. Okay, but let's say if it goes against you, that's fine. You managed. You only paid with $250. So you take 250. So 10,000 minus 140 less 250. What's your remaining balance? Right? $99,890. Emotionally, you're not disturbed. Why? Because you're only $100 down. That's fine. Maybe the next trade you hit it. Okay. Maybe this next trade on Amazon. Let's say the next trade on Amazon you hit max profits. Okay. So I'll give you one loss here. So let's say we get, because you're consistent, you're being picky. Here you hit the next trade for max profits. You buy it at 250. Okay. What's your account here? 10,390. So we had our first trade 10,140. The second one you lose all 250, and your account is now lower than 10K. Okay, your account was now lower than 10K, 98.90, but then the next trade you hit it. Okay, 250 to 500. Okay, sorry, this will be 10,390 minus 250, your principal also. So 10,140, you're back to plus. Am I making sense here, guys?
Yes, sir.
Basically, I'm just here, you know, even though, so Apple, your balance was 10,140 here, you come back to 10,140 again. And then because you're picky with your trades, you will have more winning trades because you're consistent. The only reason people fuck up is, I'm sorry, people mess up is because when they're wrong with their position sizing. You can hit 5 trades here. You can make $500. You can make another $500, right? You can make another 500. Maybe you lose 200 here, right? Just for example, you're on a streak, you make another 500, and now all of a sudden you're tired of making $500, even though your account went from 10K to even though your account went from 10K to 12,300. Now all of a sudden you feel good. You don't even look at your account. You don't even look at your account that your account's at 12,300 bucks. What's the next mistake you're gonna do here? A lot of people cannot stay consistent. You know what you're gonna do? You're gonna end up doing something stupid and buy a call which is 20 bucks. That's exactly what you're gonna do. or most traders, they end up doing it. And that goes to shit, it goes to zero. What happens? You're back to 10,300 bucks. And now you're gonna revenge trade, right? This is trading psychology that I'm giving you guys. No one's gonna teach you this outside unless, I mean, it's like a paid course, right? And now what's gonna happen here? You're gonna revenge trade because you wanna make this 2K. You know what you're gonna do? You're gonna go in with 2K again. And guess what? The market is gonna take this 2K back too. I'm telling you guys, this is reality of trading. This is exactly what happens in the trading world. Good traders, then now all of a sudden, after having so many winning trades, but because you were not disciplined for one trade and that trade did not go in your favor, you were brought to break even plus a little bit of profits. But because of your psychology, because of your ego, human behavior has been the same for centuries. It's very hard to change because you were not disciplined. You wanted to revenge trade. You said to yourself, let me make one trade for 2K. Let me just make this 2K back. Now you give that 2K back as well. And now you're back to 8,300 bucks. Your winning percentage is high, but because you went out of line, your right position sizing, your position sizing was not right. Your ego came in the way. And I think most of the people that trade, just ask yourself, I mean, if this has happened, would you just type in yes? Some already did. If this is something that happens with you and this is something you cannot control, and you're a victim of this, then, you know, no, this happens. I mean, this has happened with me many times in the past, trust me. And I learned it the very hard way when the responsibility was on my head and I had to pay my bills. That's when I understood risk management. That's the only reason that I stress on risk management so much. Right? I mean, after that, you will have some losing trades, right? Maybe, so you're at 12,300. Let's say you're a disciplined trader. You stick with your trade. Maybe you lose 700 here. Maybe you lose another 400 here. Maybe here you only make 50. Then fine, you know, things happen. You lose another 200 bucks. That's fine. But then eventually you will make 800 bucks again, right? What does that bring your total to? I mean, there's random numbers I threw. You're maintaining your account. There's no, so let's say for the first month you were at 12,300. The second month you had a bad month, but at least you were disciplined, right? You're at 11,850, right? Maybe the next month, just random numbers. Maybe you're you know, you're disciplined. I mean, you make your money. You only do 3 trades for the month, maybe. I don't know. I mean, what's your account here? You know, 12,550. That there's growth. Okay, but this is only going to come if your position sizing is right and your total cost of your trade makes sense. You have to be very, very consistent. Consistent is the word in trading when it comes to position sizing and the total cost of the trade. Okay. So guys, I mean, there's nothing better I can tell you guys about risk management when it comes to this. The only thing I can tell you is the right position sizing and total cost per trade. Now let's look at some charts. With this comes picky trades. Your trades have to be on point. They have to be very good trades. You cannot just look at a chart and enter a trade. Apple was a very good trade. Amazon, for this count, great trade, but only if you do spreads. If you do calls alone, then it's a hero or a zero. So I would do spreads here. If I was to look at another chart, just for an example, let's say I look at Square on the daily time frame. On daily, there's not really much direction here, right? On daily, there's not much direction. So here, I would not play this chart unless I'm going deep into technicals here. Maybe I can draw a trend line here. You know, I'll draw this trend line here. Oh, wow, it's holding a trend line, right? I mean, great. Or I can do here. But the thing is, this is chop zone right here. Right here, there's no direction. For this to be a picky trade, it has to break above 275 and hold. Once it holds above here, then I can maybe take a shot at upside. Here is fighting. Okay, you can play this bounce on a trend line if you're very good with technicals, fine. Otherwise, wait till the confirmed level. Okay. Mohammed, so a 10K account, you can do calls alone also. You can do spreads also. You can do a mixture. Like some stocks, you can go with calls. Some stocks, you can go with spreads. Like Amazon, I would do spreads. I will not do any calls. And if I do further calls, like for $2, then those are way out of the money, and the chances of those working is very low. But when they work a lot. I mean, I've taken Amazon low calls. I take them almost once or twice a month to more than 500%, right? But that only happens sometimes, not all the time. If you have the patience for that, then yes. Right. Another chart, maybe Zim is breaking out. It's a little extended. I will not play here because the premiums will be high. PLTR is near resistance. I would not play this. PayPal, I like PayPal, right? This is something that I would probably play to the upside, right? So you have to be very picky with your trades, because if you look at the weekly looks really nice on PayPal, right? Can continue going much higher. So you have to be picky with your trade. The trades have to make sense. There has to be legit reason behind it. Don't play the chop, play a nice uptrend, play the breakouts, play levels, and then you can make your profits from there. All right, guys, that was 30 minutes, and 30 minutes went by fast just on account management. Okay, so I hope that made sense. So that was 30 minutes for that. So I hope it made sense. Now what we'll do for tomorrow is some charting sessions. So yeah, I mean, see, Harman, slowly or faster, account will go fast. I mean, there's something called compounding, right? You guys, I mean, compounding is a beautiful word. It's the most beautiful word in the world, I think, in history. It's my favorite word. If you know what compounding is, you can make as much money as you want in this world. Let's say you take a 10K account to 20K in maybe 6 months. People do it much faster, but let's say 6 months, you grow it slowly, 2K a month, okay? At 20% in options is very possible. Okay, let's say you take 10K to 20K in six, forget 20K, let's go even a lower number, 15K. Okay, in 6 months. Okay, in 6 months. Now with the same plays, same discipline, what's your 15K account going to be after 6 months? It's not going to be 20K, it's going to be 22,750, right? Make sense? Why? Because 50% of 10K is 5K, so 50% growth here is 5K, right? And let's say you go get the same growth here, 50%. Also, how much? 7,500 bucks, right? And then 22,750. How much is this? No, is it 22,750? What's 75? 50% of 15K is, oh my God, what's wrong with the math? 22,500. Sorry, boys. My brain sometimes is what about 3750? So 7,500. Okay. Make sense? And then 22,000, 7,500. Which is 33,750, and so on. I mean, but you guys get the point. Okay. So compounding is beautiful, and your gains will slowly grow as long as you're consistent with your size. You hit a certain milestone, then after that you want to, maybe increase the size. So if you're starting with 10K, your first goal should be being consistent, taking it to 15K, and then maybe you can keep the same position sizing. I mean, be more disciplined. That's fine, or increase the size a little bit. And now from 15K, maybe you want to get to 22K, right? To 22K, okay? Or maybe from 22K, now you want to get to 30K, okay? So slowly, that's how you have to work on your numbers. It's not just that you wake up at 9:30 and at 4 trading is done. You need to sit after hours. You have to look at your numbers. You guys need to, every day before the market opens, you need to know what your cash balance is, how much margin you have, how much is in your positions, how much is the equity, like these things you need to know. Like most of you guys, I can promise you, I can guarantee you, you guys have no idea what the cash balance in your account is right now. Like most of you guys have no idea what the cash balance in your account is. You guys need to know that, trust me. If you guys know your numbers, you will make great decisions. You'll be right most of the times. Okay. So learn compounding. Harman, the answer to your question is compounding. Grow it slowly, and then that slow growth eventually will get bigger and bigger and bigger with more money in account. Yeah. Okay. Anything else here? Josh, and you have more money locked in equity, and you're often selling equity to option trades. See, Justin, depending on the equity you have, you can just leave it alone. It's up to you. I don't know what companies you have, right? You would have to just analyze them and what growth they have, right? I mean, me, when I buy equity positions, I usually leave them for a very long time. Like Amazon, I bought last year in the pandemic around 1,800 bucks. I'm not going to touch it. Like, I don't care what happens in the market. I'm not going to touch Amazon equity. I'm just going to leave it alone. But it really depends. Some equities you might buy at 20 bucks. They're probably trading at 45, 50 bucks. You want to look at them, what the markets are doing, because equity saves your money in the account. Keep that in mind, right? Because in options, sometimes you go out of hand. If you're going to use that money for options, are you using it for weekly or leaps? That's the main question. So if you're selling $1,000 worth of equity in your account, where are you putting the $1,000 bucks? Are you going to put that in a $1,000 weekly option? or are you gonna buy a 2023 Leap or something? Okay, so that's the thing. If you're buying a Leap, those options will hold value. Okay, those options will hold value, and they'll last you. Like if the stock goes down, your Leap will have some value left to it. Okay. I do have short-term timeline. Yes, my goal is optimus. So I have all types of goals. I have short-term, I have medium, I have leaps. If you go through my alert strategies, I buy a lot of leaps, which are my long-term goals on those stocks. And then I do go a lot of short positions, and then I do go with spreads also, right? For maintenance. So I do everything and just work on the numbers. I mean, if whatever profit you make on options count, if you have a 10K account for options and then you have 10K equity, from that 10K account, if you take your 12K, is wise that you transfer like $300-400 to equity or something. And now, because you also want to grow your options account so you can make more money in the future, right? I mean, we have traders in the group who have taken 4K accounts to 100K in the last 2 months, right? I have a lot of messages. There are a few people that you guys see, right? They only trade leaps now with the big money that they have made. We have quite of those people. But if you don't manage your size and you don't manage your positions, you're gonna end up you're gonna find somebody to blame. When people lose money, they will never blame themselves, right? It's human nature. They will always find someone to blame. Okay. I mean, people blame Elon Musk for buying Dogecoin. He never told you to buy Dogecoin. He just put a status up, right? So working on your numbers is you. We can only give you the right information, but managing your account is you. Okay. And so it's a 7:40, guys. We're 40 minutes in. Let's do some charts for tomorrow. Anything that you guys have on your mind that we can go over right now, right? Any tickers? HD Home Depot. I think I did Home Depot chart. I did post. So this is a weekly chart on HD. I do like retail. I love retail, right? Because cost has gone up on many products and they're increasing prices. Yes, their profit margins and everything will be, they might remain same or whatever it may be. But these are the big companies. They know what they're doing. And there's nothing but growth for these companies, right? I mean, so Home Depot retail looks great right now, and I'm long on it. I don't have a position in it right now, but I might buy some long spreads. If on the weekly, we get a break of 340 and close above. So break of 340 and close above, it can give us a multi-week run in this channel or the top channel, okay? And we can probably see 380, 390 soon. So Home Depot, I love. Pfizer, I bought a January position, right? And this obviously requires some vaccine news, right? Let's see what happens. If we go on the monthly here, this broke out after a long time. So Pfizer broke out after a long time, and it's trying to break out here. Last month it broke out, they sold it off. For 1-2 months it might be here, but once it breaks out, this is breaking out after 21 years, by the way. So 1999 and now. And once it breaks out, there's a good chance that this thing might go parabolic. That's the reason that I bought the January calls, because this can hit $60 so fast. Like it's a slow mover, but it's worth a chance, right? And with some positive vaccine news, this can go much higher. But it has to keep holding above this previous support, okay? So as long as it holds above 46, 47, we can definitely see a move towards 60, in my opinion, and all-time highs. MSTR, if Bitcoin keeps ripping into tomorrow, and this is a monthly bull flag, by the way. This thing's gonna go skyrocket. It's gonna skyrocket. I already know. So this is a monthly bull flag on MSTR. I would probably buy equity, right? Even if you buy one stock at $700, you can probably double it in the coming months, I think, as long as Bitcoin keeps going up, right? For 1-2 months, it might even stay sideways or give a dip, but the day it closes above 800 on the monthly, right? 790 is a number here. It needs to hold 790. I still remember, right? And then 800 and plus hold. This goes to 1,000 so fast. Okay, this can hit 1,000 very fast. MSTR, but obviously it requires strength in crypto, mini Bitcoin. Okay, go ahead. This is a monthly chart. So it's a new IPO since from last year, July 20. So it's been in the market for 1 year. On the monthly, it's trying to build a base. Very simple. It just needs a break of June. So look at the June high price. If it can get above the June high price, we can see a move back towards $78. But for a company like this, a big shift. This is the monthly chart I'm looking at. I would love to look at the financials and know what this company does, right? So you just have to look at the numbers, growth, and what not, and then play based on that. Okay. VNTR monthly is, just by looking at the monthly, looks like there's a lot more downside from my experience. Charts like this, they never go back up, they just keep going down. But this needs a solid break of this $6 level. Until 6, I would not even sniff this chart. Until $6. Right now it's at 313. So that's 100% move it needs. But until 6, I will not even sniff. However, if you're playing based on technicals, you're trying to catch the 10-15 cent equity moves, that you can. For that, it depends on your technical skills, what you think, and I can just share my opinion. It's trying to hold this base right here above $1.26, made a 100% to $6. It gave up the gains. Now it's below the 200 moving day average. And what I see here is trying to hold this level. For me, I would play above this above 340. So from 340, I would play this probably towards the 200 moving day average, above 340 to 375-ish. So it needs 340 first, though. I would not buy here. No. Apple, I went over. Beautiful uptrend from here. As long as we hold above 154, I think 160 comes. Right. I mean, that's the only thing I can say on Apple because it's at all-time highs. Right. I don't want to draw no trend lines. Nothing is at all-time highs. So there's probably more upside. But 150, 154 is must on Apple. Hold. AMAT. Vimal. Yeah, I'll do TSM weekly. I just saw that right now, so let me just go over AMAT. AMAT, I love the sector. I think AMAT, once it breaks above these levels, it's going to go much higher. Here is sort of trying to break out of this bull flag, right? Sort of a bull flag here on the daily, right? Trying to break out, and if we can close above this 137, 138 level, we can go much higher, right? Above 137, this can definitely see 140 and 140, and then followed by 143. Above 137, you can catch $3 move towards 140, in my opinion. Okay. TSM weekly. Okay, so a beautiful break on the weekly. I think so. This is very bullish. Sometimes when charts do this, right? This is a pattern I've been noticing lately, right? It goes sideways for many days and weeks. It goes sideways and for many days and weeks. Gracias. It goes sideways for many weeks, right? And then what they do here is they will flush it. They will make it look bearish, and then boom, 1 week they just recover all the gains, and then the next week also follows. Now what we want to see is we want to see this just hold above 120, right? Hold above 120 like the lows of last week. But here, if it takes over, so now 1, 2, 3, 4, 5, 6, 7 on a month. Okay, so first number here is 125, and then 128. Through 128, you can probably see all the way top to 140. So 125 is a must hold. VLAD on weekly, 125 is must, and the MACD is also resetting, and then RSI strength and strength. But above 125, I think 128 and then 140. I use all time frames. So Orientin, sorry, I cannot pronounce your name, but I use all time frames. If I'm going in a weekly, I will go daily, weekly, whatever it may be. If I'm going in a monthly option, the further out I go, the longer time frame I look at. Okay, the near term, you look at near term transactions. For daily, like if I'm scalping, then I will look at the hourly or 2 hours. Okay, so it all depends. GPV. I don't trade this a green powder water company, but weekly looks a little bearish, right? If it breaks lows of this week, you can see our test of 200 moving average. I would just avoid this chart. Maybe let it settle for a few weeks. Here, there's no direction. It shows more downside than upside. For upside, it has to get above these levels of 23, 24 at least. Okay, but here it can definitely see more downside. So I would probably avoid this stock right now. IP monthly, this chart looks good. So let me just zoom out a little bit. So this monthly is trying to hold above resistance. If it takes out 64, 65, I play to the upside. It can have a massive move. So IP monthly looks great. It's at resistance, it can fail. So I would wait until 65 right here. If it takes out 65, you can catch a $3 to $4 trade move on this, on IP. Hold on. All right, guys, I think, sorry, I have a meeting. They're here, so I'm going to have to end this, but I hope it made sense. And we'll see you guys for pre-market. Any chart requests which I missed, just tag me in Discord or premium chat. Just please tag me on our premium chat and Discord. Thank you guys for attending. We'll see you guys.